We want to bring in Michelle Snyder, MarketGauge.com partner and director of trading research education. Michelle, it's great to see you here. So inflation, one of the big takeaways in this quarter, the slowing economy. How did that shape this past earnings season?
Well, for one, the actual pricing in many cases have come down, but the interest rate impact, I think, was probably the bigger impact in terms of what's happening over the last quarter, the fourth quarter. And I think what we're going to see going into the first and second quarter is going to be more follow through on that. But in terms of inflation itself, if you look at it, there's so many dislocations in terms of how people are looking at inflation. And I think right now the biggest focus and what could impact earnings the most in terms of what going forward and the inflation numbers is exactly what's going to happen with the Fed's response to this banking crisis that we saw this week. Because this is just the type of chaotic situation that we have not seen all the ripple effect from, but yet it could be that the Fed might be forced to pause and make that choice between rising prices or an economy under collapse because of a credit crisis.
Michelle, why do you believe this Silicon Valley collapse will change the thought process of Jerome Powell?
Well, because he's obviously watching very carefully what might happen to what we've seen with the overall market. Two would be, of course, the credibility of just the banking industry. I mean, this is the second biggest collapse of a bank since 2008. And three is because really what it does is it just shakes the foundation and the credibility of something that people often take for granted. I mean, for example, Wells Fargo, and I know we're going to talk about that a little bit later, but they reported today customers were not seeing their deposits reflected in their statements or their paychecks showing up that Wells Fargo does transactions with. So, this is just the kind of thing that can be a very, very not only chaotic situation, but an unraveling for the Fed because they're going to have to give some confidence back that they've got things under control. So choice, recession, or let prices goose up a little bit.
So, Michelle, let's dive into some of the winners and the losers of this earnings season. Recession was one of the themes out there. Clearly, some of the leaders of these companies dealing with that threat differently. Who were some of the winners?
Well, in terms of actual sectors and industries, obviously energy was one of the biggest winners. They reported record profits. So that was a plus. Wholesalers, as you had mentioned before, Target and Walmart did very well, BJ's. And then also, I think that, some of the companies like Meta, because of their year of efficiency, brought in a lot of buyers. We've seen some incredible rallies off the lows, Tesla being another one. So that would be kind of where, and then some of the industrial metal companies, by the way, like, for example, Steel Dynamics or Century Aluminum, because of the demand that people are having in the EV space. So and of course, semiconductors, let's not forget about that with NVIDIA and Microsoft holding on. So I think that those are the areas that when passed, what I'm more interested in what happens going forward, and we'll see if those companies continue to be in good shape.
All right. How about some of these sectors and companies losing in the fourth quarter?
Well, in terms of losers, obviously banks, they started out well, but this has really put kind of a kibosh on them in terms of going forward. But the banking industry did not report as well and robustly as we started the earnings season for the fourth quarter. It'll be interesting to see. I think it'll be even worse going forward because forget about what happened this week. Just thinking about with these interest rates and people being able to go into more fixed income for a higher interest rate than they're going to get if they put money in the bank, that forces the banks to actually have to compete and raise interest rates, which of course will affect their bottom line profit. So they already started with losses. That could worsen, obviously, discretionary retail. And I know you want a couple of companies. We can talk about Lululemon being sort of a classic, one that I would be looking at as a potential loser for a few reasons. And I think we have to really see what happens here with just the supply and demand in terms of what it's going to potentially lose as far as even e-commerce, like in Amazon, for example, they've had their problems with layoffs. I think they have bigger problems because there is so much competition to them right now, and they've spread their costs so far that they've already started to break down. So we could see big surprises on the downside as they go forward into Q1.
Michelle, what about the strong dollar? How big of a headwind was that this past quarter?
Well, it was a headwind, but I think what's so interesting that happened today, and Jared mentioned this before, was that the dollar came off when generally it's a flight to safety. And that's going to be another big factor because the two aspects of inflation are rising prices and less purchasing power based on the currency. So the dollar, if it continues to go down from here, which it easily could be perceived initially as a good thing, because obviously things get cheaper, but it could also turn out to be a big negative if people can buy less with that dollar and the dollar continues to free fall, which would of course be more inflation.
All right, Michelle Snyder from Market Gauge. Appreciate that. Thanks so much.